If you are interested in U.S. commercial real estate and you reside outside of the U.S., there are tax implications to consider. This video will focus on tax implication for Canadian investors. For all other investors, we encourage you to speak to your accountant or contact us for further assistance. One of the most common questions we receive from Canadian investors interested in U.S. commercial real estate is, what will the U.S. tax implications be if I invest in U.S. real estate? Of course, there will be U.S. tax implications for you as an investor in U.S. properties. And remember, all Canadians must report their U.S. income on Canadian T1 personal tax returns. However, there are existing and proven options to manage your U.S. taxes, so it doesn't have to be overwhelming. Depending on your personal situation, having the right tax structure in place for your investments can help you achieve important objectives such as avoiding cross-border double taxation, mitigating taxation of operating income, avoiding double taxation of corporate earnings, obtaining long-term capital gains treatment on sale, avoiding gift and estate taxes, limiting overwithholding, limiting contact with U.S. tax system. There are many ways to invest in the U.S., but we are going to focus on the two options that tend to make the most sense for our clients. 1. Investing as an individual. 2. Investing as a Canadian or U.S. corporation. Investing as an individual is the easier of the two options due to the low administrative requirements and costs for filing. That said, if you already have a corporation, we'll be reviewing that later. As an individual, you have 3 routes available to you with regards to filing. Individual investing, Route 1, is the most straightforward. You can choose to have U.S. taxes withheld at the maximum rate of 39.6%, and you don't have to file a U.S. tax return. In this scenario, if your investment income is $10,000, funds withheld would be $3,960. This will be your final tax obligation to the IRS, and you won't need to take any further action. However, if you don't file, you will lose the full withholding tax amount on your investment income. In individual investing Route 2, you still choose to have your taxes withheld, but you file your U.S. taxes at year-end. Similar to Route 1, if your income is $10,000, funds withheld would be $3,960. When you file your U.S. taxes at year-end, you will claim the personal exemption of $4,050. Then, you will claim depreciation and other allowable expenses on your investment property. In this example, we've used the amount of $5,950, which on $10,000 in income will reduce your taxes owing to 0. Once your tax return has been assessed by the IRS, you should expect a full refund of your withholdings. You should also note that you can double the personal exemption if both spouses are named on the investment. Doubling your personal exemption allows you to collect an additional $4,050 in investment income tax free. To do this, both spouses will be required to file U.S. tax returns. However, this would only be worthwhile in order to offset higher investment income that may result in taxes owing. The third individual investing route is typically the route we recommend. Here, you are required to submit relevant forms that exempt you from withholding taxes. You will then file your tax return at year-end. The net result is identical to Route 2, but here, you can avoid withholding entirely if you file the appropriate forms and follow the correct procedures. If this looks like a lot of paperwork, don't worry. The forms are simple, and your accountant can help you with these. As long as you do not expect to exceed $10,000 in income from your total U.S. income per year, you can file for exemption from withholding. As you can see, Route 3 requires a little more effort, but you avoid withholding. Now, remember, we have another option available, investing as a Canadian corporation. Investing as a corporation is more complicated to set up initially, but can provide other benefits. As with the individual, corporations can choose to file for a withholding exemption or not. The only difference is the timing of when you receive your money. If you choose not to file for a withholding exemption, you simply accept the corporate withholding of 35% and file your U.S. tax return at the end of the year. In this scenario, if your income is $10,000, funds withheld would be $3,500. When you file your U.S. corporate taxes at year-end, you will claim various exemptions, depreciation, and other allowable expenses against your investment income. As a result, on our $10,000 investment income example, you will typically reduce your taxes owing to 0. Once your tax return has been assessed by the IRS, you should expect a full refund of your withholding tax. However, like the individual investor, you can file for a withholding exemption for your corporation, which requires completing the correct paperwork and procedures to file for a withholding exemption. Corporations are subject to different tax rules than individuals. There are different forms to fill in, which your accountant will help you with. They are also subject to a small amount of double taxation for Canadian companies, currently 5%. So let's summarize the benefits and drawbacks of investing as an individual or corporation. At around $10,000 in property investment income per year, you should expect to pay zero taxes with both options. You can also file for an exemption with both options and avoid withholding taxes. However, investing as an individual is the easiest options with lower costs for filing. And if your spouse is also named on the property, you can double your personal exemption. However, a corporate structure may be more beneficial to Canadian investors who prefer the shelter it provides and who may already have an existing corporate structure, in which case investing as a corporation is preferable. Although it may seem complex, it is manageable with the right, experienced partners to help you. They can help you choose the right structure for your needs. When investing with MSR, you enter into an investor partnership with us. And with guidance from our partners at Real File Chartered Professional Accountants, who specialize in cross-border tax situations, we will determine the right tax structure for your unique needs. If you're interested in investing in U.S. commercial real estate, we encourage you to set up a conversation with us or visit our website at www.msrholdings.com.